Okay, great stuff. Let's do this question. I'm thinking, do I transfer this to a PowerPoint? But I think I can manage it just about here. Of course, you've read the question. You're part exchanging and buying a new car. So I suspect this is this kind of thing. This area, we seem to be doing a lot of these, and I think this is where the examiner will want to go. This type of anything to do with disposal. So you want to be like 100%. And it's the repeat. It's the repeat of it, isn't it? Thing is, you bought this car, 12 grand, and they're telling you 30% reducing balance, depreciation in the year of acquisition, but none in the year of disposal. So you're going to at least depreciate it for 4 years, and that's it. And then you'll stop because you'll be disposing it in the fifth year. Whether you call the first year a short year, it doesn't matter. So 12 grand. So in effect, we need to somewhat, if you like, it's up to you how you go for the 30% reducing balance. The point is, take 12 grand, find 30% of it, of 12 grand, and deduct that from this. And whenever you get your answer, take 30% of that again, if you like, and deduct, right? So, okay, so let's go through it really quickly, right? So let's start. So 12,000 is just a long way around of doing this. But what I'm going to do is I'm going to use a PowerPoint just to sort of make my life slightly easier. But I'm going to do it double entry format just because I'm teaching. So I have cost of this. I don't know if it's a car or a machine. It doesn't matter. I'm going to put 12,000 here, right? And I'm going to call this accumulated depreciation. So, and I'm going to call this depreciation just because I'm teaching, I'm doing it this way. So 30% depreciation at 30%. So let's do that. So 30% times 12,000 is 3,600. So I'm going to have 3,600 here, and I'm going to write here year one, 3,600. And then I'm going to transfer this to this is year one. So year one, transfer to income statement, 3,600, and that's done. That's year one, right? So from a what's the word? From a reducing balance method, I'm going to say 12,000 minus 3,600, and that's 8,400, right? That's 8,400. Then I'm going to multiply this again by 30% to get rid of that. So 8,000 times 0.3 gives me 2520. So year two, 2520. So 2520, year two. Yes, 2520. Not a problem. So I'm going to carry this down, add those two things together. That's 3,600. And that gives me 6120. 6120. Bang, bang, bang. 6120, right? So that's my opening balance at the start of year three. Okay, so I'm transferring this to the income statement. 2520. All done. Right, so what do I now have here? At the beginning of year three, I'm going to take the 2520 off here just to get me 8400 minus 2520 is 5880. So I'm going to multiply this again by 30%. This is for year three. Multiply this by 0.3, and I have 1764. So year three, 1764, 1764. Carry down, add the two together, 6120. That's 7884, right? So I'm going to have that, bang, bang, brought down 7884, right? So that's the end of year three. I have that. So I now have accumulated depreciation, if you like, for 3 years. So year three, transfer to the income statement 1764. Great. And then finally, I'll do the fourth year, which of course is um, again 58. Doesn't matter how I do this. I could say 5880 minus 1764, or just 12 grand minus 7884. It won't really matter. 5880 minus 1764, and I will have 4116. That's my net book value at the beginning of the fourth year. By the end of the fourth year, take 30% of that. So times 0.3, and I get 1234.8. 1234.8. So year four, 1234.8. And let's just erase a few things here. 1234.8. 1234. 1, 2, 3, 4.8. And I'm going to add that, carry down, add the two together, 7884 takes us to 9, round that up, 9119. Yes, and then that's that, and then brought down 9119. So that's your accumulated depreciation, and that's your cost by the end of those 4 years. Great, so let's keep that, and let's go back. Right, let's go back to the question. So what you now have is that you have here, when you're getting rid of the old car, which is what's happening here, you will credit the cost account with 12 grand, and you will credit debit disposals with 12,000. Remember, you're getting rid of that old car. You would have had 9119 in the accumulated, so I'm going to debit that 9119 and credit the disposal account. Yes, and that's what's going to happen with that. And then let's just quickly look at the new car we're buying. And so you remember that with the part exchange, I had said that what you need to do is that you are giving, you are contributing. So your disposal account currently looks like this, yes, 12,919. What you're doing is you are selling the old car, and it depends on what the value is, and the value of that of your old car is 3,800. So in a way, if you were selling your old car for cash, you would have gone 3,800, right, and bank, and then you'd have worked out some kind of gain or loss on the right on that based on the difference. So this car is worth about 2,000. So 12,000 minus 9,119 is the value of this car. So that's just shy of 3 grand. That's about 2,881, right? So you have made a profit on this because you're able to exchange this car for 3,800, right? So you have 3,800 here, and then you have bank 3,800. You have bank 3,800. That's what you would have had if you got it for cash, but you're not getting it for cash. You're using that as a part exchange to buy your new car. So you can almost write new car here, which is what's going on here. So you will have, basically you're using that. So you think of it like currency credit coming out of that currency of the asset of the disposal, because there's an asset in here, isn't it, that you're disposing, just like a bank account. Credit, you're reducing an asset, you're giving that out. You still owe the 11,600. You haven't quite paid for this yet. 11,660, right? So that's a liability that you owe in pursuit of this car, which is 15,000. And the way these things work, delivery, because you can't get the car, this delivery charge is necessary to get the car to its place of working condition. So you need to add the two together. So 15,250. And the other is just motor expense. It's not capitalized. It's just tax disc, isn't it? So 210. So 210, right? So there we are. So and that's how you deal with this. So this is how we purchase the new car. The new car is this thing, 15,210, but we are in effect contributing to that. Really and truly, yeah. I mean, that's really these are the journals, aren't they? The journals. So I'm debiting 3,800 here, and then I have my new car of 15,250. That's my new car. And then I have expense here of 210, and I have a liability of 11,660. So great question, please, to work on and make sure you're comfortable with. Phil, great stuff.